Tesla has been experiencing many problems recently, from the perceived demand problem to the car company recalling its cars 4 times in 1 week due to software issues. People are losing hope in Tesla, and investors no longer want promises, but results. Hey everyone, welcome back to Everything Tesla Stock. Tesla has been able to battle numerous market challenges over the past few months. Several investors believe that inflation has kicked in too much and demand is declining as a result of lower car prices. The automaker is suffering from a declining stock price and a perceived drop in its future performance owing to Musk's new engagement with Tesla. And there is a possibility of the FED raising interest rates again in the future. But do these factors actually affect Tesla or its future performance? And could there actually be more to expect from the car company? More to come in this video, but before we get into it, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. While it is obvious that Tesla's stock price is only struggling to go up the chart, especially as inflation and demand concerns linger, it is still clear that the car company is in a good position in terms of its finances. Now, a lot of people do not realize how good Tesla's margins really are, and so they judge the car company by its performance on the stock market. Tesla's operational efficiency and vertical integration are playing major roles in the automaker's profit margins. The company sells its cars directly to consumers, sidestepping the dealership model of traditional automakers. And compared to billions of dollars a year that other automakers spend, Tesla's marketing expenses are negligible. On a cost per car basis, Tesla's advertising expenditures in 2020 didn't amount to $1 per vehicle. By comparison, Ford spent $468 on advertising for each car it sold in 2020, while ad expenses was $394 per car for General Motors. For Tesla, rather than putting money into marketing, it spent liberally on research and development. Tesla's vertical integration strategy also includes batteries. The car company makes some of its batteries, even though it still buys from third-party suppliers. Tesla intends to continue expanding its battery manufacturing capacity and so expects that economies of scale will help drive its costs down further. Likewise, it is also improving its battery technology. Tesla's 4680 cells are said to be cost-effective and able to store more energy and provide extended and improved range, which should help it bring down the total expenses of manufacturing Tesla vehicles. Overall, several factors are helping Tesla generate higher margins than its competitors, and it appears that the automaker will keep benefiting from these factors for the foreseeable future. Likewise, once Tesla is able to solve production issues at its new factories, it could increase production to meet up with expected demand in the future. Demand for EVs is soaring in so many parts of the world, and globally consumers bought 6.6 million plug-in vehicles in 2021. According to a projection from Bloomberg, this number is predicted to triple by 2025, leading to 469 million passenger electric vehicles on the road by 2035. And this could eventually increase to 612 million EVs if the world gets back on track towards net zero emissions by mid-century. The wave of domestic policies in several countries, just like the US, can also send EV demand skyrocketing in these markets. The US government has set a goal of making half of all new car sales electric by 2030, and new legislations like the Inflation Reduction Act and California's 2035 ban on gas-powered vehicles is further promoting this goal. While ICEs were still the dominant market contender last year, the world is only 1 year away from an end to the sale of new ICE vehicles. EV sales were experiencing rapid growth, and even performed well during the pandemic, which saw general car sales fall. As of March 2022, there were more than 840,000 plug-in vehicles registered in the UK, consisting of 460,000 fully battery-powered electric vehicles and 380,000 plug-in hybrids. With EV sales at a record high, Tesla could gain significant share of the EV market in the future. However, it will have to sort out its delivery issues at its factories to be able to keep up with that demand. Tesla delivered 343,830 vehicles in the third quarter of this year, and if the automaker can increase production at its gigafactories to a considerable level for the rest of the year and in the coming years as well, it could increase delivery up to 600,000 in the second quarter of 2023. In October, Tesla announced its delivery and production numbers for the third quarter, reporting 343,000 total deliveries and 365,000 vehicles built, falling below analysis forecasts. The car company said it produced 19,935 and delivered 18,672 Model S and X vehicles, and it produced 345,988 Model 3 and Y vehicles and delivered 325,158. According to Tesla, the lower than expected numbers resulted from production stoppages to update its factory in Shanghai. In a recent report, the car company stated that it produced orders that have been divided more evenly across its factories, after a growing inability to match its manufacturing rates and cost throughout the second half of the year. In the third quarter, production was affected by the slow momentum of the Austin and Berlin gigafactories, as well as continuing issues at Shanghai, which faced downtime due to COVID mitigation measures earlier this year. In July, Tesla reportedly halted production at its Berlin factory for 2 weeks due to multiple problems. This was only 3.5 months after Tesla opened the German Gigafactory. While Tesla is still on the move to ramp up production in this factory, just like in its Texas facility, production is still below the numbers needed to take Tesla to the point where it can produce 20 million vehicles per year. Tesla's got to ramp up production at these new factories, and likewise the old ones like its Gigafactory in Fremont and Shanghai. While the Fremont factory is no longer Tesla's largest by production volume, it is still one of the company's most important facilities. It is the one that produces all of the company's vehicles available to date, including the Model S, Model X, and the Model 3 and Y. Tesla's other factories like Giga Berlin and Texas only produce the Model Y for now. Also a concern, however, is that Tesla may not meet up with its demands and deadlines for ramping up productions at these factories. Elon Musk has lost credibility in terms of meeting project timelines, and this is evident in Tesla's release of FSD. The car company is yet to fully release its FSD feature, even after several episodes of missing deadlines. There are several other similar events that are possible reasons as to why some Tesla investors still doubt the automaker's full potential. Tesla recently broke a world record for the fourth recall in a week. The EV maker recalled a total of 80,561 vehicles in China due to issues with software and seatbelt issues. According to a report by the National Highway Traffic Safety Administration, 29,348 Tesla Model X cars have the potential for their front passenger airbag system to deploy incorrectly during certain low-speed collisions. Another recall was made after the TSLA found the Model 3 and Model Y Tesla EVs had the potential to present reduced visibility in dark conditions. However, Tesla had said the risk could be solved with a software update that's free of charge for current owners of the Model X vehicle. Also, while Tesla may be falling short in terms of the number of cars delivered, it's important to note that the automaker's deliveries represent only one measure of its financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors, including cost of sales, foreign exchange movements, and mix of directly leased vehicles. EV batteries need minerals like cobalt, nickel, graphite, and in particular lithium, and the race is now on to mine enough of these materials. Furthermore, the minerals needed to fuel this EV boom are also in demand for energy storage and other clean energy technology. Just as fossil fuels have powered the global economy for the past 150 years, these minerals are going to be the crux of the energy future. And since Tesla's looking to invest in the energy business, mining these minerals could be a way to secure the needed raw materials for its business. This does not mean, however, that Tesla stock is sure to go back up to incredibly high levels, but these factors will mostly take stock prices back to a more tolerable level than they are right now. Do you think so? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.